Vodafone Idea has cut its merger synergy target by 2 years. The merged entity has also earmarked a capex of 27,000 crore rupees for FY19 and FY20. Samit Sarkar is here to tell you all about that and what the analysis that he's been working on. Samit, what does that tell you?
So if you see, Vodafone Idea conducted an analyst meet yesterday where the company said that they are aiming to reduce the timelines to realize this merger benefits. Now earlier the merged entity expected the benefits to happen in the fourth full year of the merger, which has now been cut to 2 years. Now the merged entity expected an annual benefit of close to 14,000 crore rupees, of which 60%, that is close to 8,400 crore rupees, would be on operational front, while the remaining 5,600 crore rupees would be on the capital expenditure front. Now, if you see, the company has also given a clear breakup of from where they're expecting this operational synergies to come in. So, if you see, the bulk of the savings would come in because of lower rentals and energy costs, that is because of lower towers required by the entity. Now, apart from this, the entity is also expecting a synergies of close to 300 crore rupees from IT and network cost each. Along with this, 1,200 crore rupees would be saved by the merged entity on account of acquisition, servicing and advertising cost. Now, though analysts expect the company to achieve most of the synergies, the data compiled by Bloomberg Quint shows that the net operational benefit would be still 80% lower compared to the EBITDA what the company did before the merger was completed. Now, when the merger was announced, the last 12-month EBITDA of the combined entity was close to 24,400 crore rupees, which has now been reduced to 4,700 crore rupees due to intense competition triggered by Reliance Jio. Now, post the annual operational synergies of close to 8,400 crore rupees, the combined entity's EBITDA would be close to 13,100 crore rupees in FY21, which would still be lower by close to 11,300 crore rupees compared to what they were doing earlier. Now, along with this operational synergies, the company has also announced various measures to reduce its leverage ratio, that is net debt to EBITDA, which is currently highest in the industry. Now, if you see the company's current leverage ratio, that is net debt to EBITDA, is close to 24 times, which would come down to 8.6 times as the company realizes this operational synergies. Now, post this, a fundraising of close to 25,000 crore rupees would help the company further reduce its leverage ratio to close to 6.7 times, and a stake sale in Indus Towers would bring it down marginally further to around 6.3 times. Lastly, the other key highlights from the meet include the capital expenditure guidance that the company has given for FY19 and FY20, which is close to 27,000 crore rupees. The company has also said that they will now focus their investments in most profitable and attractive areas, which would also lead to improved 4G coverage in these areas. Lastly, it is expecting the average revenue per user to increase on the back of the simplification, rationalization and upselling of their tariff plans.
All right, thanks so much for that analysis, Samit. Let's move on now and talk about stocks in news. Darshan Mehta is joining us now with all the stocks that you have to watch out for in trade today. Morning, Darshan. What are you picking up?
Yeah, so quite a few mid-caps in focus. First of all, it will be Gujarat Ambuja Exports, which will be in focus. The National Green Tribunal order has stated that proceedings against the company's maize processing unit in Uttarakhand have been dropped. Huhtamaki PPL receives closure direction from the Maharashtra Pollution Control Board on November 20 for its Thana plant. It's sizable chunk as far as revenues are concerned. Jet Airways clarifies that the news item of merger with Jet Air Privilege and Jet Airways is speculative, but they are in lookout for investors for funding. Deepak Fertilizer and Petrochem says that normal operations have started once the IT seizure and searches are now they were over. GMR Infrascience concession agreement for the development of a commercial port in Andhra Pradesh. 8K Mile Software moves into the ASM framework at this point of time. Tata Steel will meet Rare Enterprises and BNP Paribas over the next few days. And finally, Raymond Promoter Group acquired 70,000 shares from the open market from between November 19th and November 20th.
All right, thanks, Ashran. Well, those are the stocks that you have to watch out for in trade today. Quite the list of mid-caps, like Darshan said. Let's move on now and talk about politics. As the election mood reaches fever pitch in Rajasthan, the Congress is looking to ride an anti-incumbency wave to clinch the desert state from BJP's Vasundhara Raje. While most opinion polls give the Congress an easy victory, the party leadership isn't taking anything for granted just yet. Congress Rajasthan chief Sachin Pilot says that he expects the BJP to be combative in Rajasthan. Bloomberg Quint's Tamanna Inamdar caught up with Pilot in Jaipur and began by asking him about his ambitions of being chief minister.